Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. This is our public broadcast. Probably maybe just do 15, 20 minutes. Still having El Salvadorian life issues, I suppose, for our show producer director. So we don't have any of the fancy intros or any of that fun stuff that Chris likes to do for these videos. Also, too, I noticed I asked him if he could get yesterday's Afterparty up on the dashboard and in the database. Had a really good session with Stuart there yesterday. I was quite pleased with his conversation with the crew. And also, too, I think, it's pretty important to understand crypto has come an awful long way here in a very short period of time. So, should we maybe temper our enthusiasm in the space for a little while? Unfortunately, let all the noobs who came in and chased and bought the top of the market get punished. And we let things settle back down. And then when the public's not interested again, then we can go back and start buying up. I do have a fair bit of cash. I don't think this little old lady portfolio, unfortunately, it's just not that accurate. But I have, sort of petitioned people on the site. I am willing to pay money to somebody to help me try and get this thing actually looking professional and up to speed. But you can see right now, cash, we've got about better part of $10,000 sitting there waiting to be spent. It's just, frankly speaking, I don't see a heck of a lot in the broader crypto space that I really want to spend money on. So I'm just going to be cooling my jets for a while, and I wouldn't be surprised if that's not a bad idea for a good portion of you people as well. But having said that, I'm not going to tell you ever on this channel what to do with your money. You all know that. I will show you what I'm doing with my money, and hopefully as a demonstrator of best practices, you see my account balances going up over time, and you're like, hey, I guess that guy knows what he's doing. But I'll never tell you what to buy. Ever. So just understand that. I actually had a really constructive class with the level 3ers discussing short option strategies yesterday. So super advanced stuff for them. Had a very good time with them yesterday. It was only a 3.5-hour class. So hey, we're getting better. As I had said earlier, our regular show producer director isn't around, so I'm just sort of hacking this, and I threw up a Google Hangout meet or whatever the hell they call these things. So if you are trying to join the sort of the cool kids table on the site in the Hangout with me while I do this video, just understand it's we're not doing the Zoom call here today because that's kind of Chris's domain. What's the big deal today? In fact, actually, I even gave myself my trading spreadsheet. I even gave myself permission to sleep in because I really didn't want to trade through FOMC days. They're kind of splotchy, but how ironic. The opening range trade did work today. So it just goes to show Murphy's Law. You should have zigged when you zagged and should have zagged when you zigged. This worked out to a better part of $100 on these micros. This opening range trade setup, but anyway, it is what it is. Also, too, noticed my notes here from this morning. Like I said, I gave myself permission to sleep in because of the Fed. But my notes from this morning where I tell you, man, these Bitcoin is looking a little bit toppy. We now have a pretty well-defined empire. Forming here, and actually I'm quite surprised. They keep, just as they kept taking the higher, and you just never knew where the hell the damn thing was going to stop. These lows that I guess there was a bit of a panic overnight. They pressed the market to new lows. It's fascinating. Look how quickly we are approaching that 38.2. We might do this in just one candle. Bang! I don't know. Anyway, long and short of it here, this is a weekly price chart. You really don't want to see this big weekly empire form here. That's probably not going to be good for the kids going forward. But I also noticed things like if we look at the how can I do this? The total market cap for crypto, so that's including all the poop coins. Big old empire forming there. We do have a bit of wiggle room here, so that's, I guess, a bit encouraging. We head back down, break through these lows, that actually becomes a sell signal. These are weekly charts too, so a little bit higher time frame. Did notice on the dailies, and I'm wondering whether, I think this Solana, that was weird. I think this Solana story is kind of like, this Solana is probably this is going to be this cycle's, um, like SBF and Luna and Celsius and all, the rock stars from the last cycle. I have a feeling this Solana is going to be like it as well. And I noticed, although, did I put in the same link for both of these? I might have. Yeah, I did. So actually, I screwed that up. Let's see. I don't know whether this. I noticed that this Solana chart on Bird's Eye. I wanted to load all these ahead of time. Look at this. It's a great testament. My old boss at Top Step, Johnny Hoagland, he had his weekly pivot levels, and look how the market came right down to that damn level and tagged it. And then I put my order in like literally the moment it tagged it, and no fill for you, bastards. Anyway, I've often said, like, I don't mind paying Top Step and giving Johnny Hoagland $50 a month just to have his levels, because god damn, they're so powerful. Anyway, that's another conversation. Where were we? We were talking Solana. Where's the Solana chart? Yeah. See this bird's eye. Geez, you do this and it just won't even load. The conjecture that I have on the site right now is, the community gifted me $500 worth of this Solana, which is kind of like a replication. I started with $500 on the Trex market there back in 14 and ran that up into the hundreds of thousands. So the question is, could I do it again on this Solana network? The community gifted me $500 a few months ago. And this thing got up to about 1400 here recently. Of course, this step thing, it's a bit schizophrenic, jumping all over the place here. But I'll be curious to see whether we have to head right back down into that sort of $500 area as like a Wyckoff check. Loaded up on a bunch of names in the Solana space, and you can see it's a bit of red out there. It's going to be a bit challenging. Yeah, there's the Solana chart. So you never know how these silly bull runs are going to end, but usually they end with like a big blow off top, and I think that's basically what you have there now. We often say candle body highs for trade location, wicks and tails like to be eaten. There's a whole bunch of trapped bulls up here that would love nothing more than to get released if price could ever get back up into this range. And then also notice too, what an interesting coincidence. If we do happen to bottom in this particular case off of these lows, notice how, and that's assuming that we sort of, back up into this tail and into these candle body lows, all that kind of stuff. Notice how the reload zone would also line up nicely. We haven't seen the ultimate low on this move just yet. And I hate to say it, but today's price action here, which I think happened pretty late yesterday, it actually confirmed this empire, this 3-bar fractal failure. So the market is definitely in a market is definitely in a bear phase right now. The issue now becomes, do we dip down into support? Last time, sort of the bulls stepped up and reversed the market. Obviously, there's a whole bunch of trapped bears that would love to get released. So if we dip down into this tail here, those bears will go, "Oh, thank goodness! All right, buy them back, right?" And get out of those shorts. So I think you have your trading range now established on Solana. Bottom end of the range, top end of the range. And what the hell? It's only what, $130 between friends? What's that? That's nothing. So how ironic. I think there's your playground for Solana for the next little while. I don't think it's a good idea for us to get too wrapped up in price action here the day of a U.S. Federal Reserve Board meeting. You might find that things are all over the map here by time the end of the day rolls around. But let's just remember the context of everything, right? We've got this big eclipse event here. The market pivoted off of the eclipse last fall. We have, of course, FOMC meeting today. And usually the market has some pretty wild gyrations around the FOMC events. I think actually I put them all on these charts. Yeah. With regard to the stock market, believe it or not, I could see actually another push higher here, and not so much into this first eclipse. If I understand correctly, the first eclipse is a lunar eclipse, but the second eclipse, which is the big one in early April, it is the solar eclipse, and that's gonna like literally stop the humans in the track, especially the humans in North America. From what I understand, it's supposed to go right across the United States, so everybody and their brother's just going to be like, ooh, look at that. So anyway, my hunch is that there's going to be some sort of pivot through that event. And we have been talking on the site lately. What are some of the catalysts that might drive a correction in the market? And I kind of believe that I guess first off, the way that energy prices have been acting recently, that energy unfortunately is a very, very powerful inflationary force in our society. So I mean, if you just look at the energy charts, I wouldn't necessarily say that we have broken out into a new bull run. If anything, probably what we really want to do is see W's on other sides of this trend line here. Of course, with these contracts expiring, these lines keep moving around here. So we are trying to break through that trend line now. I suppose if the bears can carry the day, then we'll roll over here and we will not W out on the other side of this trend line, and maybe we do bear A, B, C, Ds. And if that's the case, then I do like the idea of the Fed being given permission to sort of back off. But that's not happening right now. And if we drill down to just the daily chart, the irony of it all is that they pivoted the market right there, I guess the end of October. It didn't make that big of a difference for the crude market. Crude prices were heading lower, then we put in this bottom, then we put in this Adam and Eve bottom. We've been just grinding higher, making higher highs and higher lows. I suppose we're coming up into 2.618, still a little bit far away, around $85 or so. This is the whole sort of buy when it snows, right? October, November, December, sell when it goes. Also, buy your unleaded the middle of February, sell at the middle of May, made money 9 out of the past 10 years. Blah, 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 blah. And then I might even ask, what does things like, Mr. Fink's favorite oil stock, which I think is pretty much like a darling of the world now. What is ConocoPhillips doing? That thing sure looks like it's pressing higher here. It's got some momentum. It's got some buying momentum. Willie is officially stupid, so I think you're a little bit late coming in on the buy side here. Obviously, you wanted to be buying through all this. But that sure is pushing up. And of course, the seasonal trade, and probably the market we should look at, is RBOB, reblended gasoline. I can't remember what the hell there we are, RBOB. Does that look like it's slowing down? I do have a bit of a momentum div coming in here. Willie is pretty stupid. It hasn't broken yet, and I hate to say it, but gee whiz, that sure looks like a massive bull flag. Take us up top here a little bit more, and I think this is very inflationary. I suppose we could probably do a big old Foggenbaum right off of that low there. Boom. There you go. So 2.618, fascinating. Because actually, I think that Bitcoin's actually kind of doing the same thing right now at 2.618. And if this does resolve bullishly, which OBV is still pointing up, we are getting a little bit nosebleedy on momentum, but next stop should be 4.669s, or basically going out and just testing that high up top there. And then the question ultimately here is, does the fundamentals actually justify this? What I did find fascinating, of course, today, Wednesday, is an EIA day, EIEIO. Where is that screen? I've got it on here somewhere. I guess maybe it's over here. Unleaded gasoline stocks are being drawn down dramatically. Now we're actually at the point where we're at like the extreme end of the range here. This is just pure supply and demand. Lower inventories means that consumers are driving their cars more. And of course, that usually, more demand usually translates into higher prices. So we are getting the fundamental anecdotal information that indeed the economy is still pretty strong, and inventories are not rising egregiously. In fact, they're falling, which means we should expect higher prices into the peak of the spring driving season, which usually comes, like the old cliche goes, you buy the middle of February, and I think, look at that pivot right there. Where's the middle of February? I guess it's that breakout there. But if you had bought, basically, Brian and his silly W's, if you had just bought this W pattern, I think you'd be feeling pretty good right now about your unleaded trade. And this thing theoretically shouldn't top until we actually get to the May 2-4 weekend, right? So that's out here. That's theoretically the official kickoff of the summer driving season. And I would not be surprised if we go something like A to B and then C to D. What a surprise. That's going to take us up, fill in this gap, test this high in earnest, maybe come up and kiss that 4669. By the time we get there, we're probably not going to be looking... Well, the spot market, I guess this will look the same. But, what you should be doing here is looking at like the May contract, the July contract, and August contract, right? That's how you would trade the futures. Anyway, point of the matter here is that still looks like it's pointing up. That is inflationary. There's no way in hell I could see the Fed lowering interest rates in the face of that. The backdrop here, and I do find it fascinating that for some reason, and I can't quite figure this out. I keep hopping over here. Sorry, everybody. Number one, stock market seems to be relatively happy. So why on earth would the Fed, if we use like the S&P 500, for example, why on earth would the U.S. Federal Reserve Board even consider lowering interest rates in the face of that? That's ridiculous. I mean, who teaches economics? Who teaches trading? This is nuts that they're thinking about lowering interest rates. Remember, the Fed uses lower interest rates. That is its primary tool. We've all been like ridiculously corrupted over the past 10, 20 years when you guys actually think that the Fed normally prints money. They never want to print money. That's the last thing in the world they want to do. These are banksters, right? I mean, they're not socialist fucking woke idiot politicians that really don't understand economics. These are bankers. The only reason why they printed the money is because they floated way too much, way too many bonds, and they knew that they were fucked. The Chinese had them by the short and curlies and just said, look, if you don't take these bad bonds off our hands, we're going to bankrupt your country. And so the banksters said, oh, I guess we better do something. I know, let's go and print a whole bunch of money. Give it a fancy name, quantitative easing. Ooh, look at me, I'm all scholarly. But the bottom line here is the only reason why they did it is because they had to. That's been done now. I don't think you really want to get into the business of predicting that they're going to be printing more money. I mean, if you have a central bank that, not even sort of preface that, if you have governments that have absolutely no idea how economics actually work, and maybe governments run by like substitute drama teachers and lifelong bureaucrats, like the deputy prime minister of my country, her biggest claim to fame was that she was a government bureaucrat trade representative for like her whole life, working in the State Department. All of a sudden now she has like the ability to run a government and run countries because you're a bureaucrat for half of your life. I don't see understand how any of that works. Anyway, the point of the matter here is you got to look at that chart and you got to say there's no way in hell the Fed is going to lower interest rates in the face of that. It's just, if they do, this thing's going to go absolutely crazy. And then all the public's going to go, see, look at the rich keep getting richer and the poor keep getting poorer. So if anything, the Fed, I would even be surprised if you actually find out the Fed says, based on the data and based on the fact that we still have an inflation problem, we might even have to raise rates again. But I don't know. I don't think they're going to do that because this is a political year, and they certainly don't want to be seen as affecting the outcome of the election. So what I do think happens is that they basically do nothing, which is pretty much exactly what we've been saying for like the past 4 or 5 months. Don't expect a heck of a lot out of the Fed. But anyway, it is a Fed day. And the data coming out, if these people are data dependent, then the data coming out right now, I think, unfortunately, favors austerity and even potential. We got to calm things down here a bit with the unleaded gasoline market going forward. And this is not, hey, go and start, if you saw these inventories cranking higher and we had like a major problem, people just simply couldn't afford to buy gasoline anymore because they've lost their jobs and, the economy's in the shitter and the inventories are going through the roof, then I would say, you know what, you've got a pretty good case to be made for the Fed to cut rates. But that's just not the case. Anyway, blah, blah, blah. Brian heading off on a rant there. Would love to talk to you guys about what the dashboard is seeing. It's still ill, and Stuart and I still have to figure this out. The irony of it all, though, is that I think the actual DI index is doing its job. What I do find fascinating is the high-grade corporate bond market's fairly strong. The Japanese stock market, we have 2 different proxies in our ETFs. The Japanese stock market is very, very strong. Another comment on the junk bond market. I've told you that there is a guy that I like to follow. His name is RJ Speaks, I think it is. RJ something like that on YouTube. You can find him. And he was talking about the insane market manipulation around the bond market last year and how a lot of corporations were going to go bankrupt if they actually kept bond rates as high as they were last year. The Fed came in, talked the market down. We're going to cut rates. They never did cut rates, but I think that they got what they want. The high-grade corporate bond market, the junk bond market, they're fairly strong here. And, of course, they've got to get through this massive refinancing of all this U.S. commercial paper and stuff like that. So, ironically enough, the market manipulation is working. Mwah, que bella! Absolutely perfect. On the flip side, it's interesting how Japan finally announced that they actually have inflation coming back into their pipeline and they're going to abandon zero interest rate policy. And the Japanese yen is just absolutely puking out here, which in a weird sort of way, of course, helps Japanese exporters. So that makes sense and it validates why the Japanese stock market and things like Toyota and stuff are doing so well. But, if we look at things like the Japanese yen here, been a bit of an anomaly, and of course I've been worried that a lot of people are getting sucked into believing that China is basically coming back online and it's kicking ass and all that stuff. I don't know. If I use things like the Japanese yen as a proxy for the Asian economy, still looks awfully weak. We had, of course, bearish bot setups that we've been following all along here. And you can see how much further it's got to go here. And that does not look like a bullish chart. I'm sorry, folks. It just doesn't. So I'm skeptical about Asia here. And what I do find interesting is if we look at this whole Chinese situation, oh, by the way, your friendly neighborhood communist dictator dickheads have gone and passed another fucking legislation in Hong Kong where you're not allowed to even open your mouth in public without you being threatened of life in solitary confinement and slave labor. And if you happen to die while you're there, okay, well that works for the CCP. They don't mind that. Has anybody heard from Jack Ma lately? By the way, anyone? So, I mean, it's tragic how this has gone, but I do find it interesting that we're starting to get momentum divergence coming in on this Chinese story. I've said repeatedly, hats off to Stewart. He did like this idea of coming into the Chinese market here a couple months ago. But now, interestingly enough, you can see we've bumped up against trendline resistance. And, especially on this chart, this Hang Seng index, wow, can you ever see the divergence? And you can literally see price momentum rolling over here. So I don't know. I'm very skeptical of the Asian story. Ironically enough, I think the story that kicks ass is well, definitely Nvidia, but this would almost like a Taiwan story in a weird sort of way. But I definitely like the Toyota Motor Company. I mean, God, this I was touting this trade idea last year, and I missed my fill by like 2 ticks. The fuckers, stupid capitalism. And look how that damn trade is performed. Ah, kill you. And here's a funny thing. Oh, by the way, it turns out that the demand for electric vehicles is absolutely plummeting. You know what? Kind of a funny story, and like Hertz said, "Oh, everybody's gonna be driving electric vehicles. We're gonna go all in on electric vehicles," and they're getting absolutely destroyed now. Lots of articles about that. I saw even in China D's. Can you say that? What time is it? Oh, I should probably wind this up. Well, we'll finish off with some fluff bullshit here. It is interesting to see that even the Communist Party of Canada's what do you call this, government funded media outlet, even they are admitting that the EV market is collapsing. And I have to say, if you actually look at the economics, other than the fact that they have these insane tax cuts and tax incentive, and of course a lot of those are being clawed back now, it actually doesn't make a lot of sense to buy these EVs. The batteries, if you happen to have your battery die the day after your warranty's over, it's like literally the cost of the car to replace the battery. And then here's an interesting thing. It turns out that you have to buy special tires for these cars because the cars are so damn heavy, and there's the nuance about it. I thought it was interesting listening to a car guy talk about these electric vehicles. That's something that people who buy these EVs, they don't even realize. And of course, no salesman's gonna mention that, but you have to replace the tires fairly often, and the tires are freaking expensive. So I do find it fascinating that this whole EV story is unwinding. And of course, the irony of it all, technical analysis 101. I think we've talked about this at length. There are a number of really interesting reasons to get short from of this Tesla, and I don't see this trade ending anytime soon. And I do find it fascinating that literally, even right now, with price sitting right here, you can make the argument that there was the 2000 election for Joe Biden right there. So you could actually make the argument that Tesla's actually less than it's been the entire time. There was only one other small window when Tesla stock was actually lower than what it was through that entire Joe Biden presidency. That I find fascinating. And if anything, I really like this as an analogy of that stupidity of that Jupiter Saturn cross event, the fear cycle apex, all us being locked in our cages, wearing the face diapers and all that nonsense. What a beautiful analogy of how completely stupid this human species got through this whole cycle. And god damn it, did I ever miss a cool trade on this Toyota? And what a great analogy of weekly W's for the win. I mean, this is what you really want to hunt for. I mean, hell, I could teach a damn course off of this, right? You just simply draw your reload zones. Uh, wow, what a surprise. Look at that. You know, I can't show it. This is a micro chart, so it doesn't have the indicators on it. But do you get any kind of bullish divergence in price down here? And then you could argue, you know, this could be an atom and then an eve or a double bottom RLZ within RLZs. I mean, God, that's exactly what it is you want to hunt for on a weekly basis on price charts. Take a screenshot of this, folks. I mean, regardless of all the FOMC rhetoric and the stupidness of, you know, woke politicians that really should never have been put into power, but it was the stupidity of this cycle. But you want to learn how to trade and make good investment decisions. This image right here is it. Trendline breaks, reload zones, weekly price charts, W's within reload zones, and look at the end result. The only thing that I fucked up here was I had my bid 2 cents too low. Ah! I'm like Gollum. Actually, I just recently watched that video, the movie again. You know, Gollum when he's off being, leading Sam and Frodo, and you know the Sam and Frodo turn up to him, and he's sitting there talking to himself, and they're like, "What's up with you?" And he turns around and he goes, "Ah!" You know, that's when I see that. I just go, "Ah!" Anyway, all right. There's your fun anecdote for the day. As I said, I don't think there's a hell of a lot for us to talk about with Bitcoin. Yesterday in the after party, after we had our conversation with Stuart, we went through all of the ETFs, and they all look like they have head and shoulders patterns developing here. There's nothing to do in crypto right now. If anything, just cool your jets. You should have just made an absolute killing on your accounts over the past year. And if anything, nice. I'm starting to hear all the FUD and all the, the sky's falling and oh, it's all a conspiracy and oh, Big Brother's here to screw us over. You know, the bottom line here is that these clowns, these, you know, institutions, whatever, they buy reload zones. So now the question is, here's price way up here. How do we get price back down into these green boxes? And the answer is they have to start freaking the public out and getting all the idiots who chased the market up top here and who thought they were going to get rich. We have to get them to the point where they're panicking and dumping, and they will be selling at horrific losses right into the institutional hands and, of course, right into my hands. So there's really not a hell of a lot to talk about with crypto right now. Anyway, we'll finish off the video with that. Hope you got some value out of that. God damn that goddamn Toyota Motor Company. That makes it just sick to your stomach when you see charts like that. But the good part about what we do is that this is just next bus is 10 minutes. You know, it will be along in 10 minutes. You know, I can't even count how many charts I've seen that have looked like this over the years. So, you know what? They come and they go. The good part about it is once you learn this skill and you can force yourself to actually step in and buy these W's, then you can make all the money you need for the rest of your life. But is it a good idea to come in and buy a market that looks like this up here? Come on. So, anyway. Okay, have yourselves a great day. I think what we'll try and do, it's always fun, but I don't know how we're going to do this with Chris MIA. I think he said he was going to try and be here for it. But at 11:30, the FOMC has a press conference. I'll try and load up a video and stuff. We have a lot of fun sort of talking through what the FOMC says and, you know, what Jerry says, and whether you can believe it, and then all the politicians, or actually the media people, who wants to have Jerry's baby and all that kind of fun stuff. So if you have the opportunity, maybe check back in on the site, maybe follow, you know, hit the little ring the bell button thing on YouTube, so then that way you can be notified when that FOMC special presentation that we do is up and running. All right, have yourselves a great day. Slow and steady wins the race. For God's sakes, don't chase. And if you did chase, you're all learning. Adam, can you go across the street and check in on Jimmy and Liz, just to make sure that they didn't chase and they're not crying in their beers right now? Your buddies here have to learn exactly what happened, and they have to learn the trap that was just set for the public, and I hope to God they didn't get sucked into it. But do me a favor and go check in on them if you wouldn't mind. Slow and steady wins a race. Don't take no with nickels. We'll see everybody for the FOMC party in about 2 hours. So until then, the only thing left for Brian to say to you good people is bye for now.